Good morning, everyone. Welcome to the Trading Market Technicals morning call video for Thursday, March the 28th. Markets ended in the red yesterday. Dow down 33, S&P down 92 cents, U.S. dollar up 35 cents, NASDAQ up 2, gold up 6, and that's basically pairing most of its losses. Dip buyers are out there, and they're still out there in full force. Markets remain well bid up, despite some certain situations out in Europe. Italy was one of the cause yesterday, as well as the Cyprus situation, still weighing on Europe. Last night, we did get a nice little sell-off in the Asian markets, basically on weak financial earnings, and of course, China government talking about property curbs. So we did get a little bit of sell-off there. Shanghai was down 64, Nikkei down 157, Hang Seng down 165. They're starting to see a little bit of concern, maybe a little bit of fear, very, very little. Market continues to be well bid up. So going into today, what do we expect into today? Well, today is the last day or before a 3-day holiday. We have Good Friday on Friday. Usually, we like to see markets really start to come off because of the fact it is a 3-day weekend, and people want to take some of their gains and want to reduce their exposure. But that hasn't been the case in the last several months, believe it or not, since the beginning of January. So we're going to look to expect that, but volatility may pick up a little bit, but we are going to see liquidity dry up substantially as a lot of these investors, and I mentioned the other day, Tier 2, Tier 3 traders are just going to be managing their existing positions where the most of the bosses are gone today. So it's going to be very quiet other than a couple of hours in the morning. I would suspect nothing really to do after 11:30, 12 o'clock today. So my advice is if you have a couple of good trades on and you're making some money, milk it as much as you can, close out your positions, and go home early, because standing in front of the screen is not going to do any good if you're down some money. Try to make it back with a low volatility environment, especially today. It's going to put a real big damper on your week starting the weekend. Okay, so let's move on, and this is what I wanted to show you. And I always look at safe haven flows and what's happening. Well, we continue to see the utility sector well bid up, while the markets are absolutely rallying. Here's the XLU versus the SPX ratio chart, and you can see that we are continually seeing strength in the utility sector. Okay, let's take a look at the consumer discretionary consumer staples. Continue to see money flowing into that. That's really not how the case usually works, right? But again, things do change, and we see money flowing in consumer staples. What about utilities and healthcare? Take a look at healthcare. Healthcare, same thing. Money flows coming in, reaching highs here. Totally insane. If the markets are rallying, there's no reason to put money in safe haven sectors, but people are doing so. So we're seeing rotation coming out of certain sectors, and that's healthy if we're rotating, right? If we have a mass liquidation in the market, that's a total different story. So overall, the overall picture, as of, let's take a look, let's say the weekly chart, looks very constructive, very bullish, and the markets do intend to look to go higher in the coming months. Now, looking forward into the second quarter, I do see risk-off themes start to take hold, and that means I do see liquidity and liquidation starting to come out of these commodity block currencies, a lot of emerging market currencies, and of course global equities. I do suspect the euro to continue to lag with Italy and the Cyprus issue, and so I would recommend also paying close attention to the Fed monetary policy. I do think that whatever they say about ending or slowing down QE3 free money is going to put a big damper on this rally. And also remember, I always mention, keep an eye on the Chinese economy. Once they start cooling off, they can only do so much, manipulate their numbers. So that's going to be the big ticket going into the second quarter. So that's what I'm looking for going into the second quarter. Now, after when we have a sell-off and maybe a decent-sized sell-off, what happens? Well, then we could take a look at what's moving forward and market maybe continue to rally and try to make all-time highs. But right now, I see a lot of red flags. Case in point with the safe haven sector really getting bid up. I see extreme complacency in the markets, volatility at 5-year lows, inflows coming in, retail buying at these areas here. Not saying that it can't go a little higher, but when you see inflows like that, that's a big red flag. So what do? Well, we buy or we sell. We're a trend trader, so we stick with the trend, but that doesn't mean that you can't sell relative weakness to what the market's doing. An earnings, a big downgrade. Case in point was Cleveland Cliffs yesterday, CLF. We looked at that. We identified the risk. Market was headed lower. 2 tier 1 firms downgraded the stock down to $10. The stock's trading at 18. So that's what we look for, right? Or we look for a buy of a stock on a pullback at a decent location on the chart so we can manage our risk properly. And if you can't find it, you back away and you play another day. And if you get 5, 6, 10 good trades in a month, you're still getting paid. So that's really what my advice is. Today is going to be really, really quiet. I would suspect virtually nothing happening unless obviously there's some sort of news that breaks out. Now let's run right into the charts. We're going to make this quick. I wanted to show you, before we go into crude oil, let me show you GDX on this chart here. And the reason why I show this to you is because I wanted to show you the ratio chart on GDX. As you can see here, GDX is starting to look a little bit better here. Yesterday we had a real nice rally in a GDX. Now, our ratio chart is still trending lower, but looking to break out of this trend line. So watch this trend line break. We did get a positive break out of the bullish percent GDM, gold miners. So this is also a positive. Now, we have this small inverted head and shoulders at the lows here. Our slanted neckline, we did break out. We back test. Now, we back tested that neckline, and we back tested the right shoulder, and we made a lower high from this right shoulder. That's positive. So now the bottom line is that I want to see a 38.50 break and close, and then maybe consolidate a little bit more, and then really start to get going. That's when I'm going to be more excited about looking at GDX for a swing trade. Now, doesn't mean you can't take it for a day trade, but if you can take this area, and this is really what I'm looking for right here. I want to see a break of this 38. Let's call it 38.75, a breakout, consolidate, and then real start breaking out of the 50-day moving average. This will come down as it consolidates. Then you got something really going here, and you could actually really run up to the 200-day moving average. So that's GDX. As you can see, we're a little slightly overbought, so a little bit of movement here, a little sideways consolidation will help the bullish case in GDX. Take a look at crude. Crude is actually very interesting here, and I'll show that to you in the USO. This is the WTI, West Texas Intermediate, and we have 5 ways, 1, 2, 3, 4, 5. We broke, now we're just sitting up in this corner. We're going to need to see a breakout of this large symmetrical triangle and start to chop around here. Now, if we take out 98, this is going to get interesting as well as the markets are concerned, because if crude starts to break out of 100, I think you're going to run to the 110 area quite quickly. And if that happens, you're going to put the brakes on the transportation sector, which has been leading this bullish trend higher. And I'll show that to you in the charts. Take a look at the USO. We'll go from here, and as you can see here, we had this bearish rising, this bear flag. This bear flag has failed, and now we're consolidating above the 50-day moving average, bullish. So the next test is going to be the top area here at 35.55. If we take out 35.55, then I think we're going to run up to the 37 area. Okay, so watch oil. Doesn't mean you have to trade it, but as a market insight, you might want to watch it, because if this oil really gets bid up and takes the cue, then I think you're going to take the transportation sector really start to wane here and start really maybe possibly rolling over, and that would affect the any type of rally that everybody's expecting here. All right, inside day again. So we have done nothing for 2 full weeks. We have opened up, opened lower, rallied back into the close, and vice versa. So really, really bad choppy price action, so we're not really doing much of anything. So that's why I say be selective in your trades, because you can still make money. There's opportunity out there, but you need to find it, and you need to gauge your risk parameters. Okay, here's the spider 60-minute, guys. Really, nothing has changed. Take a look at this range. We have literally sat in this range from. This is just about all of March. So if we looked at, if you go back and I don't have it here. I don't want to waste everybody's time here, right? But if you go back and you take a look since the beginning of January 1st, January 2nd, the gap up. You'll see we went sideways, we gapped up once, sideways for another 5-6 days, and gapped up. So this is what our day traders have been really working with here. Not much of anything. Lots of chop. Gap up, gap down, gap up, gap down, and within one big range here. So this is telling me nothing. The only thing that does tell me that when you have volatility, that it's choppy price action, that means that we may be having some sort of a tradable top soon in the cards. Doesn't mean we can't get to that 1576 area. We're not that far from it in the S&P cash. Here's the 30-minute chart, and here's what I wanted to show you. This is just a little closer view. Now, also the Bollinger Bands are starting to tighten. So this does not tell us which way the move happens, but it looks like there should be some sort of a move, a bigger move, hopefully out of this consolidation. Now look at this. If I just scroll back, if you look down here, here's the 27th and the 18th. Go all the way back. Take a look at this. All the way back to the 1st of March. We have literally gone nowhere. Inside days. We had that one gap up, and then if you look again, here we go again, and again another consolidation area, and this is all of February. Take a look at this. This is why the markets are so slow. Look at this, going all the way back into January. So as you can see, day traders are very limited to work with, but if you can manage your risk properly and you can really identify risk and manage your trades, position yourself accordingly, you can still make money. And this is why this market has just been notorious about not selling off. And if the market were to sell off and then sell off for 2 or 3 days, basically on a stair-step pattern, up 5 days, down 3 days, up 4 days, down 2 days, up 5 days, it would be such more of a healthier market. Whereas when you get one bad situation, everybody runs for the door. You're going to have just an elevated sell-off, and that's really it's just terrible the way this market's been acting. Okay. S&P 500, really same thing here, guys. Sideways consolidation. Nothing has changed. My numbers haven't changed here. 1555, 1575, 1576 area will be all-time resistance here in the S&P cash. Here's the transportation sector. Like I said, we are in a range here. We have still been in a range, hugging that 20-day and that lower end of that uptrend channel. Still in an uptrend channel, still bullish. But again, watch oil, because oil will be a mediating factor in the transportation sector. Here's the Russell, IWM's good gauge of risk. Same thing. We have just been literally just chopping around in here. So we need to be selective in our trades for the day. XLF, again, not doing much of anything. Inside day for the week. Not much to really talk about here. But I think XLF, I think the banking sector will be a nice little short trade in the coming months. Here's the diamonds. Again, well bid up. You can just clearly see right from January, big move up. Sideways consolidation all of February, good part of March, big move up, sideways consolidation again. So that's exactly what we're seeing here. Here's that trend line. Here's the 20-day, coincides nicely with the lower trend line. Sideways consolidation, same thing. We need to break out or break down for new order flow. 2 charts left. Apple now pulling back here. Had a real ugly day yesterday. Really is going to need to hold that 440, guys. I keep saying this is just a day trading stock for now. Looked constructive, right? We had this right to the penny. Pull back now. That's fine. 450. I really would like to see this thing hold to make that lower high. That higher low from here. But if 450 does not hold, 440 is going to have to hold. Otherwise, the trend will roll back again. And I think we're going to see some ugly price action in the coming weeks in second quarter. But again, we need to hold 450 and then 440 in Apple. Lastly is the Qs. I think the Qs have some pent-up here energy. Look at the Bollinger Bands. I think that tech is going to be a nice trade to the long side, actually. I'd like to see us break this 50 and 20-day moving average and get back down below this 66, 65 area. Keep an eye on the XLK too as well. But if we can get a little bit of a pullback, maybe 50% of this move, at least fill this gap to here, I'm going to really start looking to buy some tech here. But right now, we're just sideways. We're consolidating, and even if breakout above this area here, I would just be looking for day trades. But if we can get back below, and this market can pull back 4, 6, 8%, in the coming weeks, let's say, then I'd be a better swing play here. Guys, want to wish everybody a happy Easter. Those who celebrate, happy Good Friday to you. We have a day off tomorrow. Enjoy your time with family and friends, and we will be back with a big full report on Monday. Take care, everybody. Be careful out there today. Don't get too aggressive. Market's going to be real light today. Take care.